Natalie Merchant, 24 minutes before 9 o'clock, and still 55 in Linden. We're going to warm up a little bit. It's a Tuesday morning. Mike Barrett is in for a weekly installment of Good Policies. Good morning to you.
Good morning to you. How are you?
I'm fabulous.
Good.
Yesterday's weather was summer-like. Today's going to be late summer-like. I'm all about it.
No complaints there.
So, Mike, we follow your travels because we chat every week, and you tell us when you go off to this convention and that convention and this national this and down to Washington, D.C. So
You're giving me a complex here. What are you doing?
You're accomplished in what you do. So you and I, as you come hustling in here this morning, you shared with me that yet again you have been on what I'm going to deem the national front. I'm going to let you lead into this with our listeners.
Yeah, so I had an opportunity. Of course, I'm on a couple of boards. I'm on the Independent Insurance Agents and Brokers of America board representing the state of Vermont, and then I serve on the Trusted Choice board. And just by having all these contacts and people that I speak with, it's not often that I get a call, or it is often that I get a call, I guess sometimes, but there's people in the media looking for people to chat and give them some insight for something they're working on for a news story. And that opportunity presented itself. And last Tuesday, I believe it was, had a nice, it was like a 45-minute to an hour-long call with a reporter by the name of Sharon from CNBC. And it was an article she was working on, strategies to mitigate rising car and home insurance costs. So she was reaching out. She was speaking to agents across the country. I was the one chosen kind of for the Northeast. And it was a great conversation. And it was to my surprise yesterday that she was on the Today Show presenting her story, which was pretty cool. Now, granted, I didn't make the Today Show, which is good because, let's be honest, Jeff, I have a face for radio. But a lot of my talking points made it to there. I heard her referring to a lot of things we talked about. And then there was an article that corresponds with it on CNBC's website. And I actually got a little bit of a quote in there. So that was cool. But she brings up some very valuable stuff in her conversation and in her research.
Well, we've been talking a lot here over the last, I'm going to guess, about 2 years here with what's called a hard market. And was these the kind of things, where prices are going up that she was referencing?
Yeah, trying to help mitigate your expense, your exposure. So, the average annual rate for homeowners insurance increased by almost 20% in between 21 and 23. Which is pretty high. And now we're talking on a national level, so you may not see it all directly here in Vermont. I mean, we're talking about a national average, so it could be higher in some states that are messing up the curve. But auto insurance premiums are up 16.5%, which I still think is conservative. I think they're probably up 30 to 32% over the past couple of years. And they say while most people stick with their current provider, it's not a bad idea to shop around. And that was a conversation we had a lot about. Like, is it worth shopping around? There are some companies who I think are in a state of recovery in terms of the adverse conditions that presented themselves with the insurance and for home and auto, that maybe they're a better option for now because they've recovered while some of the other companies are still having a bit of a rate increase.
Hold on, hit the brakes for a second here. I'm not the best mathematician, but I wrote down real quick here. You said 20% on homeowners insurance, 16 and change percent on auto. So to get my head into this here, so that means that for every $100 that you were paying on your homeowners insurance previously, you're now paying $120 on.
Yeah, yep.
And every $100 for your auto insurance coverage, that goes from $100 to $116 and change. That's pretty significant.
Very significant. You put your homeowner premium at $1,000, and that's an extra couple $100 now that you're paying. So how are there ways, or what ways can you do to offset that? Well, I think, and first and foremost, I love the fact that during the CNBC conversation, we stress the importance of having an independent insurance agent, because independent insurance agents represent many carriers and can really help you find something that's going to work for you. And like I just mentioned, some companies have recovered. We know which ones are going to be the ones that are probably going to have a better rate. We can look at those options for you. So when you're starting to shop, go to your insurance agent first, always. Especially if you like them, right? I mean, stay with them if you like them. But they, as an independent agent, if you reach out to them and say, look, we're just really growing concerned about these increase in premiums. Is there something you can do? Yeah, absolutely. Let's take a look and see what the market calls for. I'm not going to tell you that every time we come back cheaper. Sometimes we come back with prices that show that where you're at is where you want to stay for a little while. And of course, don't forget to reflect back on those conversations we have over the past couple of weeks, months, and almost a year of make sure it's your advantage to make that decision to change one company for another, because God forbid if you have a claim during that first year of experience with a new company, you could put yourself in more harm's way. But so make it easy, make it simple. Do a little research, raise deductibles, make sure you're not overinsured, make sure that things like special jewelry, like if you have scheduled jewelry, phones, computers, things like that on your homeowner and haven't thought about it or talked about it for years, look at that. And maybe some of those things are not in your possession anymore. Why are you paying for insurance on them? So, it's all about just making sure it's dialed in to where you need it.
One of the things I like about the most, excuse me, one of the things I like the most about our good policy chats here on a Tuesday morning is one, of course, you said it, you're an independent insurance broker, so you can, check around all over the place.
Yes, sir.
But you encourage the shopping, okay? And that means that if there are people that have been insured with you, you still tell them,
Oh, I'm offering them all the time.
take a look around.
Yeah, I'm offering all the time, and I'm heeding that caution and letting them know, look, let's take a look and see if there are opportunities to save you some money here, and let's have that conversation. Let's see if there is an opportunity, and let's have that conversation about the additional risk you may be taking by switching from a company that you have a lot of experience with, no claims, and now we're putting you with a new company with the possibility of you having a claim. Know your risk, know your expectations, know what's possible. But yeah, it's always about having that conversation. And most people, when they have an insurance agent, they have that insurance agent because they trust them. At least I hope so. And so we would ask that you trust them or trust us to see what we can do to make sure that we're doing the best by your needs and your expectations. So.
Boy, I'm telling you what, I have to adjust my headphones every time we talk. I learn so much. and we do not have enough time to delve even deeper into this here, but we have, and you have, and continue to always remind people at least once a year, do an inventory of what you've got covered, because it's kind of a no-brainer when somebody sells a car or a property that they automatically will take the insurance off. But you mentioned jewelry, computers, smart devices. If you've gotten rid of something, no sense, like you said, in paying for it.
Yeah, I mean, if you have camera equipment, I have an example of a great one because it was me. I decided I wanted to be a photographer for a while in my life years ago, and so I bought a nice Canon EOS camera, and it had a lot of value to it, so I added it to my homeowner policy. And all these years later, it's still there. I'm like, why is that still there? I don't even use the camera anymore. I probably would get rid of it if somebody wanted it, sell it. So is it worth me still insuring? I'm not even using it. Am I that concerned about the risk of it being damaged? Probably not. So it doesn't make sense for me to continue paying. It's not like it's all that expensive, but when you find dollars of savings and you find dollars of savings in multiple opportunities, you're turning into some significant savings. So.
Well, to reference percentages, you said 20% on home, 16.5% on auto. And when we have an inflation rate that in the last couple of years has gone up over $11,000 for a family for food, every dollar counts.
Every dollar counts. And remember, too, that some of these market increases are market corrections. So I think some of the increases are here to stay. I think that some of the most seismic increases are temporary as the market corrects itself for insurance. So we'll get there together.
All right. Tell them how to get to you.
Sure. Give us a call, 748-5224. You can find us on Portland Street in St. Johnsbury, online, thebarrettagency.com, Google, Facebook, YouTube, and Instagram. Just look for Barrett Insurance Agency.
Never said that before, have you?
Never.
Good policies with Magic Tuesday mornings. Music from Kesha next.